Thank you, Sei. The stage is yours.
Thank you. I'm Sai Tunuguntla. I'm MD and partner at Alex Partners here in Singapore. I lead the TMT practice across Asia, been in consulting for the last 20 years, and prior to that in the industry for 10 years. We do a lot of work with private equity, and we are going to launch DC360, our proposition for data centers, very soon. Thank you. Over to you. I would let the panelists introduce themselves.
My name's Annie Satchcroft. I co-head Macquarie Asset Management's Asia Pacific infrastructure team. We're focused on investing in infrastructure across the region, but most recently have had a reasonable spike in digital infrastructure. So assets including fibre networks, data registries, telco towers, and data centres.
Paul?
My name is Paul De Win. I'm with the Singapore Exchange, SGX Group. Within that, I'm responsible for the sales and originations function. Part of that is our capital markets effort, so working with issuers to come to our platform. We're seeing a lot of good momentum in our market recently, and happy to address that as part of this discussion in the context, in particular, of what we're seeing in the digital infrastructure space.
Hi, good morning. Marcin Nowakowski here, heading up Telecom Tech Digital Infra Industry Group for Natixis in APAC. Natixis is a global corporate and investment bank headquartered in France. We work with our clients, financing them, arranging capital, and advising on M&A across the globe. Great pleasure to be here.
Good morning, everyone. Rob Lomas from AirTrunk. I head up the investments function there. AirTrunk's a hyperscale data center developer focused on APAC. We've got 13 live and in development sites across the region. I've been at AirTrunk for 7 years, and so I've been involved in a lot of the growth from the Australian base up into Asia. Thank you.
Thank you, Rob. Before we get into the discussion, I just wanted to set a few baseline pointers here. So the M&A activity across APAC has been very vibrant. So I see that 14% in terms of deal value increase year over year. And in terms of IPO as well, we're seeing about 30% in terms of proceeds, led by Greater China and India, right? So, and the sectors that we see in terms of driving this activity, primarily financial services, TMT, digital infrastructure, right? So, and it's great to have the panelists with the right backgrounds here, right? And from a trend standpoint, we see that the Fed has recently cut the interest rate by a quarter point, and also in terms of Singapore, core inflation is coming down as well. So with that context, I would like to ask Paul. You're from SGX. The vantage point for all the capital activity. So what are you seeing, and what do you see going forward?
So as I just said as part of the introduction, we're seeing a real good momentum coming into the market. And that is important because we're essentially coming off a pretty unprecedented period of 3 to 4 years where certainly new issuance activity has been at an all-time low. That's not just here in Singapore. That's been the same in most markets in the world, even the deepest and the most liquid market in the US. There's a few exceptions. You mentioned India. So India has, of course, done better in recent years. But we're seeing a real pickup. Generally, the market is performing well. Most markets in the world, actually, equity markets are trading at all-time highs. We're seeing that happen here in Singapore as well, number one. The rates environments are stabilizing, and so that makes new issuance activity more straightforward to clear and to price. The bid-ask spread between the private market valuations that people still had in mind from 3-4 years ago at very low interest rates, and what public market investors are prepared to pay has converged in the last couple of years. And we see it also in good IPO activity. So in the last quarter, just in Singapore, we've had 9 listings. That is more than we had in the year before that and the year before that. And the pipeline accordingly is strong as well as we look ahead. One thing that we see changing, and that is very important for us as an exchange, is that the type of companies that are coming through are significantly different than the types of companies that we've seen, I would say, in the last decade plus. We've been known to be the REITs market, and that's not necessarily bad thing. REITs have done great for us. But for a vibrant marketplace, you of course also want to attract the higher growth companies. And the reality is that's the supply that we see on the horizon now. So these are companies that are coming through to the market. I would say that the digital infrastructure space is in a way a nice hybrid between the two. And so that's where we've seen some of the recent successes as well. Masa was here on the previous panel talking about NTT DC REIT. They listed 2 months ago. That was the largest listing that we've seen in over a decade in Singapore, and it has done well with good, solid investor support. So we're pretty optimistic, yeah.
And how do you see the recent trends in terms of both what's happening in the US and also here in Singapore? Will that be a tailwind for you, right? Or do you see the uncertainty that is there in the market, I think, which was referred earlier in the conversation as well? How do you see that balancing?
So I guess pros and cons. I think generally, we see this all of this activity happening, notwithstanding the fact that there is still great uncertainty in the world, geopolitically, on the macro front even. What are the tariffs going to do? I think for Singapore this is a massive advantage, relative advantage. Singapore is the place where East and West comes together. That was also mentioned earlier in the discussion. Investors that think about Asia don't just think about Asia as one region, right? So it's now China and probably India and Southeast Asia. And we are definitely seeing much more eyeballs and focus on Southeast Asia as an individual region, if you can call it that. And a lot of that is driven by macro factors as well.
Thank you, Paul. Thank you for setting the tone here. And my next question is for Marcin. How are you seeing the M&A activity across APAC, and particularly in the sector that you lead, which is TMT? We saw that Japan and India, again, have been the bright spots. But in this part of the world, the M&A activity hasn't been as strong. So can you share what is happening?
Sure, absolutely. Look, I think maybe for the purpose of this panel, I'll sort of narrow down the TMT to digital infrastructure. I think that's sort of where the focus of this panel is. And it is true that the TMT M&A activity has been robust sort of all across the various verticals that we cover. So you've seen telco consolidation here in Singapore, a bit of activity in Hong Kong where I'm based. You certainly see a lot of very interesting transactions happening throughout the hardware semiconductor value chain, IT services, software. All of this is largely driven by the same sort of digitalization megatrends, but let's maybe focus on digital infra, and within digital infra, data centers. I know we'll talk about sort of towers and fiber later on the panel. Now the question why there's so much activity in data centers, and perhaps stating the obvious, that space created a pretty attractive and compelling sort of underwriting dynamics. On one hand, you have huge availability of dry powder, record-breaking capital raising efforts from infrastructure funds perspective, $135 billion or so raised in the first half of 2025. That's above the total for the last year. So big amount of capital ready to be deployed. Now, where do you channel this capital? Well, you channel this towards an industry that has the opportunity to that is capital hungry, and there's no other vertical that is as hungry for capital as data centers. That allows you an opportunity to deploy billions of dollars across single investment, and nothing, quite frankly, comes close. This is also in a vertical that offers the growth opportunity that is unparalleled in other situations, right? So you have the huge tailwinds and mega trends shaping out the CAGRs that we see across the board, that are spectacular. And finally, and that point has been challenged and debated, right? All of this comes with effectively a stability of cash flow that is underwritten by, so far, high investment grade counterparts, right? And we can sort of discuss and again debate how that changes, but that confluence of these factors created a dynamic where data centers are front end, center of sort of investment activity. Now, what's interesting is you see all range of transactions happening. So yes, on one hand, the headline grabbing sort of change of control transactions, reflecting to some extent the early bets and early conviction around these assets that some investors made. But by and large, I would say, right, the activity is around capital raising, funding, topping up capital for the platforms that already exist. And all of that is in turn channeled towards the greenfield, brownfield development pipelines that these platforms are building. So that's where I would say, majority of that activity is. Now you can complement this with, telco involvement, a lot of carve-outs of DC or infra assets more broadly. You can complement this with single asset transactions in more established markets, Korea, Japan. So overall activity is very robust, and I think the expectation is it will very much continue.
Got it. Thank you, Marcin. Now, kind of, I guess there are two classes or three classes you can kind of talk about. I think we'll focus on data centers first. So, Rob, can you share what your insights are in terms of data center market, how it is growing? What challenges do you see going forward?
Sure. The last panel was actually raised a lot of salient points that are relevant to this as well. So I'll try to be additive and not repeat what was discussed there. But the capital environment, which is the premise of this panel for data centers, has been very strong for a long time, as everybody knows. In the last 18 months, AirTrunk was bought by Blackstone. So on the equity side, we've also completed a $18 billion SLL financing, and in Singapore recently in the Southeast Asia region, a $2.3 billion facility. So those kind of numbers show you that there's still a lot of capital coming into the sector, especially for high quality assets. I think it's fair to say though that the sources of capital traditionally, bank financing has supported our business all the way through up till now, but that it's definitely capping out at that sort of level. And when you look industry-wide, that's very much the case. That at a macro level, the amount of capital that needs to come in from here, is multiples of that. So really, looking at different sources of capital is really where our focus is at the moment. And to turn it back to the themes in the previous discussion, it's not you leap from A to B, and so to bring in sources like ABS and the capital markets into APAC in data centers where it hasn't traditionally been done here is not straightforward. We spend a lot of our time with talking to banks and financiers on that side, but also to customers. They're not the contract structures, and they're not set up traditionally to support that in this region. And to give an example, we have senior reps from some of our relationship banks on calls with the hyperscalers, with the site selection people there, educating them about why contract tenor, why PCGs from the right entities in the US is so critical. And when you're looking at an individual deal, it might not matter, but you lift it up a level and say, if you want the support of the developers and the financiers in this market to meet your ambitions for your inference, clusters and that sort of thing, then you need to come to the party as well. It's a huge challenge, but if the ones that get this right will really thrive and de-risk, I guess, their businesses in this region, because capital is going to become a constraint where it hasn't been previously.
Got it. Now, just piecing both the points that I think what Marcin has mentioned, you're sharing. It's great that the demand side, is there. The financing is quite robust. But the question is, from a timing standpoint, a number of Asian markets have challenge with, getting the supply at the right time, right? So do you see a disconnect between the demand and supply, and suddenly we getting into a situation where there is oversupply for a period of time?
I think, certainly when I think about the macro view, what's the use case for these data centers? That's not changing, and people's demand for these services and that they underpin will be there. Ultimately, it's a diminishing resource, powered land, and water as a subsidiary part of that. And so there is, and again, nothing goes in a straight line. So there'll be periods of overinvestment, and that'll be a challenge for those that buy in the wrong place. But on a longer term view, if you're buying powered land in the right locations, then that really de-risks those sorts of investments. I think for us, when we look at it, it's really focusing on certain key markets and not taking it'll thrive everywhere, because it's not really the case. When you have such concentrated customer base, they don't have the time, to determine every single market in APAC. And so we're seeing this much more than in the past, where when they're looking at cloud, for example, they do want to be in every single market, and the scale is going to depend on the opportunity there. But really, where the focus now is on these sort of AI inference, sort of bigger investments, and they are not going to put them in certain locations. And so the last few years, you've had new entrants into the region peak markets and say, well, it's already saturated in the tier one market like Tokyo. We're going to go into the Philippines or Thailand. There's been a lot of that. I think that's a time that will end, and probably has already. And it's going to be, most of the focus is on these major markets. And as I said, I think in the long run, if you're in the right locations, it'll work itself out.
Got it. I hear that. Building on the digital infrastructure, the other asset classes, I think there was good discussion earlier in the panel. Wilson talked about it, but talking about towers and fiber infrastructure, what's been your experience, Annie, in terms of what's driving the growth there, and particularly in our region, how are you seeing that?
Sure, thanks. So, as with data centers, I think the mega trends that are driving the growth of those other digital infrastructure assets are very similar. So I think one of the things that's quite interesting about the discussion that's happened so far is this notion of the financing side of things and interest rates, and your question on, is that having an impact on the asset class? One of the things that we like about digital infrastructure is, obviously, on the margin, the affordability of financing does make a difference to particularly the medium-term return on those assets. But digital infrastructure, I think, as a whole, is largely secular in nature. So a lot of the demand drivers aren't actually as linked to GDP or interest rates as you would see in other asset classes, and particularly infrastructure asset classes. And I think, all those trends around people are increasingly creating data, and not just people, but machines as well, creating data, using data, moving data, storing data. Those are the trends that continue across digital infrastructure. We talk in very large numbers about the amount of data that's being created. I always think that what's really interesting is when you bring it back to your everyday experience and think about, when was the last time you were asked to delete something? Like, I remember when I first started working, every week you'd get an email from IT saying, delete your models are too big. And now, we hardly delete anything anymore. But the other thing that's interesting with that is we're also moving data quite a lot. So you think about the way we generate data, it used to be a very stationary activity. You would be at a desk, at a computer generating. Whereas now we're always on the move, always on our phones. As I say, a lot of autonomous machinery as well is generating on the move. And so when we think about that and the way that people are actually using data in practice and what's driving that increased use of data, what is very important is that digital infrastructure ecosystem. So yes, we've got data centers on one end of them, but then we also need to be able to move that data, and we need to be able to move it with low latency and securely. So, you've spoken a lot about the regional context, and the earlier panel spoke about the geopolitical context. Security of movement is also becoming incredibly important. So we've got the data centers, we've also got the fibre networks to help with that movement. Towers, obviously, I think is incredibly important. And then the other thing that we think about a lot is data registries. So all this data is being created, but how are people actually accessing it, which I think is incredibly important. So that's the way we think about that digital infrastructure ecosystem. I think the benefit of being in multiple parts of that system is that there will be times when one part is more attractive than others based on valuation. But I think very importantly, it means that the drivers that you can see in any one part are likely to have a knock-on effect on the other parts. So the ability to look across the system becomes incredibly important. The last thing that I just say is, and picking up on some of the discussions earlier around where we're seeing capital going, Rob is exactly right. Like, I think it's a sector that is going to require a lot of capital going forward, and the types of capital become very important. Some of that is availability based in terms of, people that have traditionally deployed, and particularly in the last 5 to 10 years deployed into the system, will they keep deploying? But part of that is also time of life for those assets. So to your question about, thinking about the region and where they are in terms of connectivity, there's some forms of capital, and particularly I think private capital in these environments, that will suit build-out profiles. So will suit profiles where you actually have to take a 5 to 7 year view on what your payback is, rather than an almost listed view on quarter to quarter. And we've certainly seen that even in investments we've made where we've taken companies private and they've actually been able to do build-outs and sign contracts that they weren't able to sign on the public market sphere.
Got it. So I'm, from the first round of conversations, I'm, gathering that the demand is there, the macro demand, and particularly here in Asia because of the demographic dividends, because the digitization is happening more and more with, so the demand side is clear, the path is clear. The financing side is clear. I mean, very vibrant M&A activity, etc. What are some risks that you see in terms of path to monetization? So let me start with you, Anthony.
Yeah, so look, it's an interesting discussion, right? Because I feel like we're in when we first started speaking about digital infrastructure as an asset class, I think a lot of the traditional infrastructure investors would have said, that's not an asset class, right? That I want utilities, I want airports, this is very racy, I don't want digital infrastructure. And we've sort of come through the last few years, and now everyone's talking about it as if it's got no downside. But obviously there are risks involved. So, we've talked about floods of capital into the space. So I think there's actually just a basic valuation point there. But if you step back from the valuation, I think on an asset fundamental point. So the first thing is regulation. One of the things that I find really interesting about digital infrastructure and new asset classes in general is I think that often the developers and the capital providers run ahead of regulators. And so we work out, okay, what does the community need? How do we match capital to that? What do the assets need to look like? And the regulators, I think, sometimes are a couple of steps behind in terms of catching up on, oh, hold on a second, now this has actually become quite critical infrastructure. It's fundamental to the functioning of economies and society. Do we need to step in and get involved? And so I think the regulation piece is going to become really interesting. Now, part of that is simple stuff around, well, not simple stuff, part of that, I guess, is more obvious stuff around things like data sovereignty. But I think part of it is actually around the impact on the communities in other spheres. So electricity and power availability is huge. Who's paying for things like grid resiliency? But I think the thing that's more interesting again then, and we've seen some of these examples recently in Australia just in the last 2 weeks, is for infrastructure that is so critical to the functioning of society, who's responsible when it goes wrong? When all of a sudden calls don't go through, emergency calls don't go through, or the connections go down, whose responsibility is it then, and how much regulation should there have been on that? So I think the regulatory piece is a huge component. And then the last thing that I'd say, which is a little bit to the discussion earlier around, is there oversupply? I think as with any new technology, it is going to become more energy efficient. And, if you're across the value chain, there are different parts of it which will benefit and different parts which won't. So we're actually invested in balance sheet in an AI company, and that saw a huge spike in demand when chips and processing became more energy efficient, because all of a sudden use cases were affordable to small and medium enterprises. But obviously if you're a installation which charges in megawatt hours, that is something that you probably get a little bit worried about. Similarly, it's good to have some fibre in there because that's volumetric. So the increase that you're seeing on the AI front is transferring through to the backbone. So it's interesting just seeing how some of these risks and trends impact different parts of that value chain.
Great. Paul, how do you see the path to more listings in SGX and probably also in the region more broadly?
So, I have a public market lens to this. So when I think about are we at risk of oversupply, not at all, because a lot of this is clearly happening still in the private market. And public markets have only seen very little of this. It's starting to come, certainly in this region. And that's a great thing. I would say, certainly if they come in the form of some sort of REIT structure, it tends to be more stable. But I fully agree with Annie. There's a whole spectrum here, and I would like to see some of these, different type of structures come to the market as well. Whether it's just the operating companies, where investors with a different risk profile and a different cost of capital or expected return can take part in this as well. As I said earlier, I think we're going to see a fundamental change in our market in general in terms of what type of investors are looking for. Historically, it has been, I would say, more stable, but given the supply that is out here, a listing venue and the stock market is a reflection of the maturity of the region. This region now is producing, above all, new economy companies, technology companies, a large consumer place. We haven't seen them come to market as much. Again, reflection of the maturity of this region versus the US and China and India. But that is changing now. What we need to do as an exchange is to make sure that the structures and the frameworks are there to facilitate all of this. A lot of things happening to that extent. We have been working over the last year with our regulator and some of the government institutions to, address a number of, structural challenges that we've experienced in our market. One important outcome of that is the formation of the equity market development program. That is a $5 billion amount of money that MES is going to allocate to third-party asset managers to effectively seed an ecosystem of asset managers, investment managers, to above all invest in higher growth companies in our mid-cap segment. Again, this is, if we look at the STI index, they tend to attract the bulk of our liquidity, the bulk of investor interest. Companies there do well. They are the more stable companies, the more yield-related focused companies. What we need to do is to get that investor ecosystem going for that mid-cap segment. So that is starting now. We're already seeing some early signs of success here. So year to date, the mid-cap segment and the smaller cap segment have outperformed the larger stocks. We've also seen a very significant pickup in liquidity in that space. We're going to launch a new index, which focuses not on the STI 30, but this one is for the next 50. So again, all focused on getting that investment ecosystem around the mid-cap and higher growth stocks in ASEAN, because honestly, that's where the opportunity is going to be for the years ahead. We're making some changes on the regulatory front as well. I don't think that's going to have a significant impact on, certainly not on the REIT space, because that's that's actually very efficient as it is and globally competitive. But to attract more of these new economy companies, we are firmly moving now towards a disclosure-based regime, putting us on par with the US and the European markets. whereas in the last decade or 2 decades, we've drifted a bit towards the merit-based regime in our market. And so that is something that we're correcting, and that's going to be, or that is being very well received by the market.
Got it. Thank you. In terms of, I think, talking to Marcin, there is, from the work that we have done, the conversations we have had in the markets, there is a fair bit of consolidation opportunity still pending, for instance, in the telecoms, right? The deals are more like one here, one there, right? If you look at in Malaysia, the number of operators with the telecom assets are almost like 9 to 10, versus in big markets like China or India, we have seen a fair bit of consolidation. So what do you think is the trigger for more consolidation and M&A in the traditional asset space, which is on the telecoms?
It's sure. I mean, maybe again trying to bring it back to sort of digital infrastructure, but on the telco side, right? I think it's fairly sort of established that most market cannot sustain beyond 3 or 4 operators. So there is sort of economy of scale play to it, especially as you roll out your infrastructure, your 3G, 4G, 5G. So there is an efficiency to few players operating in that space, but if you think about consolidation, digital infra space, and again, data centers, right? I think there's a pretty unique dynamic where all the operators and developers are effectively servicing very finite number of customers. And yes, you could argue sort of in the more Western markets that number is increasing with neoclouds kind of coming to prominence and gaining scale and credibility, but nonetheless, it's a very limited number. And so from a customer perspective, those customers will tend to gravitate and allocate capacity deployments towards operators that have delivered, are able to build to the specs, are able to be efficient around SLA negotiations, so on and so forth. Maybe with the exception of niche markets where somebody sort of found a unique way to solve problems on the ground, but that capacity allocation will disproportionately favor established platform play companies. So I think that's the dynamic that will ultimately drive consolidation from a customer perspective. And then there's this point that we sort of keep bringing up on availability of capital, right? Again, capital will flow towards bigger, more established, more proven, executing well platforms. And so that availability of capital, again, will sort of favor limited number of players that deliver that capacity. So I think these two elements combined will ultimately result in a consolidation. Now, before all that happens, I think we're yet to see a sort of new wave of operators coming into the data center space and sort of arriving at it not from a standpoint of customer relationship, but coming with the proposition of delivering large-scale powered sites. Right, with the view that if we can deliver scalability with speed, the customers will eventually come to us because there's no sort of alternative that can address that immediate need. So I think we'll see new platforms coming up. The success will be sort of playing out in the battlefield, so to speak. But before consolidation happens, there's a lot more to play out in that space.
Got it. Rob, there are different players with different backgrounds coming into data centers, right? So there is one real estate, background, people coming in with that. They bring certain strengths. Telcos are playing in the data center space as well. And likewise, like yourself, you have the pure play data centers, funded by private equities, etc. To Marcin's point, from a success standpoint, what's important here to succeed and gain scale?
The way we set our business up is, start with the customer. What does the customer want? And then structure your business to deliver that. And so we've set ourselves up at AirTrunk to play on every part of the spectrum. So, you might have a real estate developer with a logistics background who can build the powered shell really efficiently for the hyperscaler, but then they're effectively saying to the hyperscaler, here's the keys, that's over to you. You need to build an operations function in this market in which you're not necessarily in an environment where there's massive scarcity of technical operations people and engineers to manage these properties. So yes, there's more entrants coming in and playing in certain parts of the spectrum, but ultimately they're all servicing the same hyperscalers, and so it's really understanding what they need, and it does differ by market. there are markets where the hyperscalers have, big operations functions and it's fine. And so in those regions, we're competing with people who are, different to us. In other markets, it's the full service operators. So we think having that ability to play across the whole spectrum is really important. But it does make it, there's definitely been an increase in competition and a lot of, credible players have come in, especially in that end of the spectrum. Names like Goodman is an obvious one that's talked about all the time. They're trying to move up the value chain, and so they're trying to, go in the reverse way that we did it. So yeah, that's my perspective.
Got it. I guess there are a few considerations, I think, particularly in the emerging markets of Asia, whether it is from a data center standpoint. We talked about the power challenges. There is also water stress in a number of these markets. So question is, if you have a chance to bump into a policymaker, what would be your number one ask? Let's start with Ani.
So I think this is actually probably universal, whether it's developing or developed markets. But the number one ask, I think, is around permitting and development applications and just being able to consolidate the number of those required. I mean, I think the things that are interesting about digital infrastructure, or one of the things that's interesting about it is with some of these pieces of infrastructure, it's long distances that you're traversing. So with things like fibre or even towers which require fibring to them, you're going through multiple parcels of land, often multiple jurisdictions. There are environmental authorities that need to get involved. There's land authorities that need to get involved. There's electricity authorities that need to get involved. And in some instances, these jurisdictions actually already have legislation in place which allows the government to take a more centralised view and use their powers to effectively streamline permitting processes. I think governments have been reluctant to do that. But one of the things I think which is going to be a challenge going forward is as people work out how critical connectivity is, particularly in developing economies, in order to allow people to continue to grow and flourish, whether or not they do start exercising some of those powers more strongly and step in to streamline permitting.
Got it. I know you discussed a few points earlier in terms of
so I guess this is more a question for the others here on the panel. But if I take the perspective for us as an exchange, with a discussion earlier in one of the prior panels was the question: what role can Singapore play here? We have limited space. We actually have a water problem. But probably the most important role and most relevant role that we can play here is around capital markets, whether it's private or public. And for that, we're actually in a pretty decent position. But we should not, we should not take our eyes off the ball. There's a lot to lose if we can't make sure that our processes, our frameworks aren't, our policies aren't sufficiently competitive. This is a global market. It's a globally competitive market. And there's still a bit of red tape here and there that I guess, and frankly, part of that responsibility lies with us, lies with the regulators, lies with the policymakers. But we're definitely very focused on that.
Got it.
So maybe adding a sort of perspective to it, right? And the regulations are often seen as sort of elements that constrain the sort of development and growth. But if done properly with community engagement, with participation from industry players in it, right? Those, if designed with fit for purpose, can actually accelerate the developments. And sort of good case here is the data sovereignty, data localization laws that have stimulated sort of emergence of data centers in local markets. But I think, my ask to the regulators or point of engagement would be to assure that the regulations are aligned at the country, region, or international level, because what we can't forget about is data centers are ultimately network assets. The digital economy does not have borders of constraints, so having an alignment between geographies and regions is of extreme importance, especially as you move to scenarios where you have AI factories in Australia training a model that will then be exported and applied as a software tools in other geographies. How do you manage that? Is that allowed because the model was trained on different data sets than used in other jurisdictions? So again, thinking comprehensively about that solution across borders and from international perspective, I think it's gaining prominence.
Thank you, Marcin. Rob?
Policy certainty is really critical, and Malaysia is a good example of a market which has exploded with data center development, but because it's a new industry there, it doesn't necessarily have the regulations policy in place to handle that. At the same time, developers are making multi-billion-dollar long-term investments, and if you're changing the goalposts as you go through approvals, and then even when you're operating and looking at expanding, it makes it very challenging to align with the sort of, I guess from the data center developer perspective, one of the biggest challenges is to align your development timeline with when the customers want the capacity, because they're in a turkey shoot with the other hyperscalers trying to get capacity and compete in the cloud market and the AI market. So speed to market is then by far and away the number one priority. But developing data centers is complex, and the permitting that Jani talked about is such a critical part of it. I probably would have talked about that if you hadn't talked about that. But it's so critical that you don't have disruption through that sort of process, the 2 years it takes to develop a data center. And so AirTrunk and the industry has a huge role to play in this, working with policymakers in these markets where they're setting policies and educating about what the downstream impacts are if they change policies.
Thank you. With that, I would like to thank the panel for their insights and would open it up to the audience for questions to our panelists here. Okay. Otherwise, we give back the time here. Thank you.
Thank you so much.